In the last week, we've had a budget announcement from a new Chancellor in the Conservative government, and there's quite a few items to pick up on that are of interest to people invested or looking at investing in property. And this, kind of depends a little bit as well on how your business is structured overall. So let's go through some of the key points for property investors. Now, bearing in mind that there was also quite a bit of this was measures introduced specifically to deal with the crisis around coronavirus in the UK and support for business in this difficult time. But there are also some things for the long term that are very important for us to pick up on as property investors. So let's begin with one of the announcements around the threshold for national insurance contributions. And this may affect a number of landlords, especially landlords who may have properties held in their personal name, also some properties held in a limited company. If you're a UK tax resident, this becomes really important to bear in mind, or you're able to claim the tax-free threshold in the UK as well. There's a little bit more room if you use a structure now where you take some of your income from a limited company as salary. And a lot of us who have property portfolios will have a mixture of income coming from property in a personal name, income coming from property in a limited company, maybe some service income that's coming in a personal name or a limited company. So that generally means that we tend to take a mixture of salary and dividends. And if you are taking that mixture of salary and dividends from your business on your accountant's advice, this means that there's probably a little bit more that you'll be taking out in the 2021 tax year as salary because there's a little bit more you can take out before you hit that threshold where there have to be national insurance contributions. Ultimately, that threshold has gone from 8,632 up to 9,500. So not a huge amount, but a little bit more that you can squeeze out, a little bit more money in your pocket before you've got to pay those employer and employee national insurance contributions. Also very much related to property investors, if you're doing any sales of property in a personal name, you're flipping anything, or you've got anything in your portfolio that you maybe are offloading that was held in the personal name, a slight increase in the capital gains tax threshold from 12,000 up to 12,300 for the 2021 tax year, and that's in line. Generally that threshold moves up a little bit kind of year on year as well, so not particularly unexpected to see that change in the thresholds. Now, one of the things that was not necessarily a surprise, but we were waiting to see whether the government would put this into legislation or not. For a number of years, it's been written into legislation that the corporation tax rate, the tax rate on limited companies, was going to move from 19% down to 17% for the 2021 tax year. What the government has actually done is they've taken that bit of legislation out and they've left the corporate tax rate for the UK at 19%. Now, this was something that a lot of people were expecting because even though this was written into law, it was written into law about 4 years ago. And we know that a couple of chancellors and also Boris Johnson himself had expressed the view that they wanted to keep the corporate tax rate at 19%, potentially so that later they can use that as a bit of a lever maybe to give a tax reduction to businesses if they need to stimulate the economy in the wake of the coronavirus or COVID-19 problems that are facing the UK. It's one of those levers. So there's an argument there for not reducing tax rates right now because they may want to pull that lever at some point down the track. So that stays at 19%. No better off for people who invest via a limited company or have some of their income coming via a limited company, but also no worse off than where we were in the 1920 tax year. The reduction on mortgage interest rate relief for the 2021 tax year is now fully in effect for those people who hold properties in a personal name. Now, this effectively, what it means is that you pay a tax on your revenue rather than a tax on your profit. And it has the effect of sort of removing about 50% of the deduction you could get for your mortgage interest. It's not quite as simple as that, because what the rules around this actually say is that if you're a higher rate taxpayer in the 40 or 45% band, you can only write off the mortgage interest that you deduct on the basic rate tax band, which is 20%. If you happen to have properties in your personal name but you sit within the basic rate tax band, well, you've still got full deductibility of your expenditure. If you are in that higher rate tax band, this is hurting people at the moment. Now, it's worth just reminding you that that reduction to mortgage interest rate relief doesn't apply to limited companies. Limited companies get full deductibility of all of their mortgage interest, and that's why for a significant period of time a lot of professional investors have either been buying inside a limited company or moving their property portfolio into a limited company to deal with this. But just remember, 2021 tax year, this is fully phased in. Over the previous tax years, it kind of came in as a staged phase in. 25% of your mortgage interest was affected, 50%, 75%. We're now at the stage where all of the mortgage interest is affected like this. And if you do hold properties in a personal name, it would be worth having a conversation with your accountant, because potentially there will be a larger tax bill coming at the end of the 2021 tax year. Now, one of the other things announced in the recent budget was a 2% stamp duty surcharge on foreign buyers of UK property. Now, drilling into the detail on this, it says foreign individuals buying UK property, but also that 2% surcharge on UK-based limited companies owned or controlled by overseas investors as well. So this is coming, and this will come in from April 2021. Now, this potentially may give a small advantage to some UK buyers versus foreign investors, although for a long time we've seen a number of overseas currencies appreciating against the pound as well. So, it's kind of swings and roundabouts on that stage. The government's stated aim around this was not necessarily the entry-level end of the market, where a lot of us operate as investors, average homes for average people. This was very squarely aimed at maybe an overheated London property market. We've seen a number of measures from the UK government over the last couple of years, very firmly aimed at that million-plus price bracket, where an extra 2% will equate to quite a bit of stamp duty that you pay. When we're looking at some of the smaller properties that generally we tap into, actually an extra 2% is not a huge amount, and it's assumed that a lot of overseas buyers will probably just factor this into their offers. But as I say, there are quite a few overseas buyers who may still be in a position where their currency is quite strong versus the pound as it stands at this stage as well. So it is a bit of swings and roundabouts, and these things balance out. This doesn't come in until next year, obviously, as well, so there may very well be quite a few overseas buyers bringing forward their purchasing plans in the short term to get in before this extra stamp duty rate applies as well. And that would be very smart business if you are based outside the UK, to try and make sure your transactions fall on the right side of this deadline.